Hi guys, welcome to the post-market analysis of 18th of December. So again, we are now very close to the end of December, and honestly, this year is ending exactly how it played out. It's volatile, it's frustrating, and it's clueless and directionless. So today, again, another disappointing trading session, not because of this one single fall, but because the market is refusing to give any kind of clarity. So you look at it today, opening, it was trying to go up, got a rejection, broke day's low, broke yesterday's low, and came close to 25,700. Then one side rallied to 25,900. So it was looking like a massive recovery. And then came the sell off. So every gain has been sold into and closed at 25,815. And if you look at this in paper, it doesn't look severe. 3 days of red candles, yes. Day before yesterday, it closed at 25,850. And yesterday, if you see 25,820, so just 30 points is for someone who's not watching the market, seeing just the close 25,850, 25,820, nothing much, just 30 points. Today, 25,820, but closed at 25,815. So close to close, if you take just 5 points, nothing much. So, but again, if you look at the intraday move, yesterday, it was like from the day to high to low, it was around 160, 170 point. Today, I'll just show the chart and explain so that it will be much better. So guys, this one got a gap down and then open low is made and they bounced till 20 MA. From there, it was a big fall, broke yesterday's low wherever they took support, day's low, and then came close to 700. We were expecting that it will come and hit 700, so we're carrying position also. And then it reversed from here, broke 20 MA and came all the way till 200 MA, got a small dip and came to 20 MA. From there again, boom, and came to 25,900, started sell off. All the gains has been sold into, and exactly this level here and here towards the end, it came here towards the end, they came and closed here, almost here, and came and closed here. And here, when it came here and bounced to 20 MA, that was a very good opportunity. And then they closed at 25,815. So close to close, if you see, just 5 points. So in paper, there is nothing. But look at this chart. It was volatile, it was frustrating. And what happened is last couple of days, VIX is of course low today also. So we are not getting the follow-up moves. You get a big candle. So someone just enter upon that, like you got a red candle, a big candle. So someone enter on the put side. Then what will happen is you're not getting the follow-up. And eventually that will go sideways and you lose on the premium. You get frustrated, you get out, then you get a move. But today, because of that itself, many have not entered even after the moves, but you got decent follow-up both on the upside and on the downside, right? And many were reluctant to enter because of last few days. And this is mainly happening because the VIX is low, and VIX is low means sometimes you get this kind of volatility, one spikes here and there. This kind of rally, rarely you will get, but this was upside rally, and then there was a downside rally. Both sides, some people have got trapped because morning onwards, we all have the mindset that it is a sell on rise market. But where to sell? If you have trapped in these areas, it's okay. You don't want to worry about, because in the upcoming sessions, you'll be making money. Let me explain a couple of areas where you might have waited for this level to fill the gap. You might have got trapped here, but there was no need to enter here looking at the strength of the candle. And one more thing, if you look at the first candle itself, it's actually filled the gap, right? If you look at it, this filled the gap and reverse. So this is coming second time. But still, if you have entered and took the stop loss, it's okay. Right, second, you might have entered looking at this 25,800, went to 25,850, 850 double top. So you were expecting a similar dip at 25,850 level, right? Whereas there was a CPR pivot also, and then it didn't work out. And from 200 EMA, you got the dip. Then you got this bounce. And from 900, you might have taken a reversal position after this candle. Then you made it big. But if you have made mistakes in the areas that I've told you, it's perfectly fine, because it can happen with the professional trader. So you are in the right path, but the day was not in favor of you. I won't say that you were taking a wrong trade. So if you are someone who waited and took those trades, and again, if you took the stop loss, that's actually okay, because in the upcoming sessions, you'll be able to, by the following same strategy, you'll be able to manage it. So again, it's difficult because VIX is low, the moves are getting squeezed, the market is also getting squeezed. this kind of move on the upside and downside, it is strange also. And so, yeah, okay. From Jan onwards, I want to discuss few things like the changes which is coming, right? Uh, Yeah, Nifty lot size from Jan 1st onwards, it's going to be 65. So that have created a lot of confusion also, right? I'll discuss different cases. If you already have, let's say 975 quantity, then there is no problem. 975 quantity means 13 lots. And after Jan 1, it is going to be 15 lots and the position remain clean. And if you do not have multiples of 975, this is where the issue is actually starting. For example, if you only have one lot, let's say one lot. So from Jan onwards, that becomes 65 quantities, one lot. So remaining 10 shares, that becomes old lots. And that 10 share cannot be traded. So you must hold it till expiry and it will have to expire at its intrinsic value only. But we know if you're someone who's buying and then the chances of expiring, it's very less because you'll have to pay the time value. So the solution here is either you have to convert your position to 975 quantity or you have to square off on last trading day of December. And then you reinitiate the fresh position on Jan series with the 60% new setup. Okay. So I can do a separate video also on that. So that I just wanted to discuss because many of my mentees have asked about this. Now coming to the market today. So it's a fourth day of straight fall, right? So you can see lower high, lower low structure for the fourth session. That means what? Not a single day that Nifty break the previous day's high. Every single day Nifty broke the previous day low also. So today it broke yesterday's low, but it didn't break yesterday's high. Yesterday it broke previous day's low. It didn't break the high of previous day. Same is the case with the last 4 days. So lower low and lower high. So that is a downtrend. It is what indicating, and this is a classic weak market structure. So today's price action also, if you look at it, it's pure chaos. Market initially fell around 100 points. Then there is a dramatic recovery from 720 to 900, 180 points. And then the selling came again. Market fell more than 900 to 120, 130 points. And this is not a trending movement, right? There's a trap filled volatility and it's very difficult to trade also. One positive is Nifty closed above 25,800. And again, if you look at the close to close basis, as I told you on the beginning itself, it's not very big, but the big moves have happened in between. Now, who are the real culprits? It's again, this is between banks versus IT. HDFC once again dragged the market, right? Support was there from IT stocks, otherwise it would have been worst. As I discussed in the pre-market, looking at the ADR itself, TCS, Infosys, they help basically to absorb the damage. And that divergence is extremely important because if Bank Nifty coming down, IT is also coming down, then Nifty will be worst. So this balance, Bank Nifty is coming down, IT will be going up or sideways. Bank Nifty is going up, IT will be coming down or sideways. So otherwise, they should be inversely proportional. And normally that's how you balance the Nifty. That's exactly what you have seen. That's why close to close, if you see, nothing much. Again, sectoral damage is also there. Defense sector, it's a global problem now. Defense stocks, in fact, fell for the fourth straight day. So the reasons is there are serious peace negotiations going on between Russia and Ukraine. And peace means what? Less demand for the weapons or the defense equipment. So this is a global sectoral issue and not India specific. It's happening across. And auto sector also. Here, auto sector also fell for the fourth straight day. So let's understand the full context here. Why auto sector rallied earlier. First, August 15 p.m. hinted at GST reduction. And September 1st week, Finance Ministry confirmed that. September 22, it got implemented. And then crude oil also started falling globally. So what happened? Auto stocks rallied sharply because price have come down. Crude oil is also coming down. Now, why auto stocks are falling? Crude oil is now below 60, but Indian rupee have depreciated heavily. So even if global crude falls, local fuel prices is not going to fall. Otherwise, also government is not going to reduce the local price. So the government earlier had the room to cut the petrol price, but they won't do it because when fuel price across the world increases, then you cannot keep increasing the prices. So normally, even now also government is subsidizing. So that will continue. They won't cut the rate. So the room is anyway gone and auto sector is under continuous pressure. because of this. And that GST impact, initial first 2 months is what you have seen. After that, it's gone, right? And the same range is what we are looking for, 25,700 to 26,000 now, maybe 26,300. That's the all-time high. 25,700 is breaking. It can come to 25,500 also. So volatility you can expect in this range. Confidence is missing. The direction is missing, and you are seeing volatility, and time decay is also there, right? So see, market is not moving. Time is going fast. It's a slow move also. And positional option writers are now very happy. But VIX is low. They are not getting good premium. That's again, so everything won't come together. Again, we will discuss more tomorrow in the pre-market, looking at, we'll get the data on FIIs, DIIs, OI, and everything that I'll do in the pre-market. So that's about this session. Thank you so much. See you tomorrow. So again, if I want to talk about the breadth and volatility, broader market, in fact, did better. Small cap and mid cap indices, they ended slightly green. VIX closed decisively below 10. And that's surprising because FIIs are selling aggressively, yet that volatility is collapsing. That means there is no fear, there is no uncertainty. That indicates stability, but we can't see such kind of stability. So as long as market is consolidating, volatility is remaining low, and there is no stronger trigger which is emerging, option writers will continue dominating, and it will be in this range. And this is not a market for emotional trading. This is not a market for directional aggression. This is a market for patience, structure, and risk control. So I'll discuss more details in the pre-market tomorrow. See you tomorrow, guys. Thank you.